What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, Amazon, AMD, Nvidia, and Meta. We're going to go over some key levels to watch for the week ahead. That way you know exactly what we're watching for reversals and breakouts. Before we get started and talk about SPY on all the charts and technical analysis, we do have to cover some important reports that happened last week and some things that are happening this week that may send markets higher or force them to pull back. First things first, the first and main event that happened last week is going to be Nvidia's earnings. Nvidia reported earnings last week, and you can see that it propelled higher off its 20-day moving averages, and you can see that it moved into all-time highs. We'll talk about the specific levels for Nvidia momentarily, but before we do so, let's talk about the earnings numbers that they reported, which we're going to find on Nasdaq.com. Here you can see that Nvidia came in above expectations once again. This is looking very healthy. Overall, Nvidia has shown exponential growth, which is exactly what's fueling semiconductors higher. Semiconductors are the primary driver of the market right now, which is a cause for concern because you don't just want one sector driving the market. You generally want the market to be moving as a whole. So coming into this week and going into the next quarter, we want to start seeing other sectors starting to catch up to the semiconductor sector. That way the entire market has a more solid foundation to build on for the rally. Other than that, we are optimistic on semiconductors. We do expect them to continue pushing higher in 2024, but in order to do so, they need to continue impressing and continue delivering on their earnings numbers. Now coming into this week, the main focus is going to shift from earnings to inflation. This week we're expecting the PCE report, which is the Fed's preferred inflation gauge. The reason why this is important is because the Federal Reserve members over the last several weeks have stated over and over again that they need to see more evidence of cooling inflation before they consider lowering interest rates. Remember that the Feds have been fighting inflation for more than 12 months. But this entire market rally, ever since it started in October, has been based on the fact that the Federal Reserve will be cutting interest rates in March. But based on numbers that we saw from the CPI report earlier this month, it's not looking like the Federal Reserve will be cutting interest rates in March, and that may cause a little disruption to the market rally, which makes the PCE report, which is going to be released this Thursday before market open, extremely important to whether or not the Federal Reserve will be cutting rates in March. There's a likely chance that even if it shows that it's cooling down, the Feds will still not cut interest rates. There's no telling how the market will react, so make sure you keep that in mind if you are swinging anything into Thursday or if you're positioning yourself for the week. So now that we've covered all the important economic events, let's move on to our charts and talk about some levels and price targets. First things first, we always like to start off with the big picture, so let's talk about SPY on the macro charts before we move on to the micro charts and talk about the day-to-day. Overall, on the daily chart, you can see that SPY has been riding the 10 and 20-day moving averages, which are these blue and purple lines, ever since its rally back in October. You can see that it moved back above them and only moved below them just twice before pushing higher. So far, if you are bullish on the market, the first and last thing you want to do every single day is check that daily candle on SPY and see where it closed in relation to the 10 and 20-day moving averages. As long as it is trading above those levels, the market is fully controlled by the bulls. The moment it moves below them, then it can free fall towards the 50-day moving average, but we will update you on that in the coming videos, so make sure you're checking back in. Now, apart from the daily chart, let's move on to the micro charts and talk about some levels. The highest point that SPY reached last week was 515.13, which is also its all-time highs, which means that that is the main resistance we have in focus coming into this week. SPY needs a breakout above that level for bullish continuation. We usually would have a price target above that level, but since there are no previous resistances and there's no historical data, we can't have a price target. We will have to gauge it based on momentum and volume. To the downside, we have a support at 502.80, and you can see that that is the breakout support. This is the highest level that SPY had reached before this gap up into all-time highs. Therefore, that is a key support for us to watch. Buyers are not going to be too happy if SPY dips below that level, and it will likely fill this gap down very quickly. This is the gap that was made after Nvidia's solid earnings. The next stock on our watch list is going to be Tesla, which has been a little quiet lately. You can see that Tesla tried to move back above its 10 and 20-day moving averages last week, but it didn't seem to be able to hold that 10-day moving average by end of week. So every day, if you are looking at Tesla, the first and last thing you need to do every day is check that daily chart and see where Tesla opened and closed in relation to the 10 and 20-day moving averages, which are going to be their primary support on the daily chart. If you are looking at Tesla on the shorter term time frames, here are some levels for you to watch. Tesla has been lingering between the 181.90 and 206.75 level for quite some time. You can see that it's been here for multiple weeks ever since it reported its earnings. Buyers still need to move above 206.75 for Tesla to break out further towards the 217 to 218 price target. To the downside, we have our support at 181.90, and we have a more critical support at 174.90. If it breaks below that level, then Tesla can easily free fall towards 163 to 164. The next stock on our watch list is going to be Apple, which has been very, very weak in compared to the rest of the market. You can see that Apple is trading below all of its healthy moving averages. And if you're wondering what moving averages we have here on our chart, we have the 10, the 20, the 50, the 100, and 200-day moving averages. We use them all for different purposes, but that's something that we're not going to get into in this video. If you are interested in learning more about moving averages, make sure you check out our course. It's discounted right now, and you can find that link in our description. For Apple in specific, you can see that Friday's daily candle formed what seems to be a bearish engulfing, which is a bearish pattern. Obviously, this is something you'll also learn in the course. With that being said, we are leaning more bearish than bullish on Apple. It seems like the Apple Vision Pro, their newest product, is not doing as well as it should. A lot of people are actually starting to return the product, which is a bad sign for Apple. So for Apple in specific, right now we are leaning more bearish, so we are focused on the 179.10 support. If Apple breaks below that level, then we would consider a short or a put position down to a price target of around 173 to 174, and below that level, the second price target is going to be right around 166. In terms of resistance, Apple does have a resistance at 186, but buyers are not going to be convinced until Apple moves back above 191.80 and it moves back above these moving averages. If Apple moves back above 191.80, that places it back above all of its healthy moving averages, and then it can potentially rally towards its all-time highs once again. The next stock on our watch list is going to be Amazon, which reached another 52-week high last week, but it's still pulled back on Friday and couldn't close at that top. If you are looking at Amazon, your first resistance and focus coming into this week is going to be 175.75. Amazon is going to need a breakout above that level in order for it to see the 180 price target. To the downside, we have a support at 171.75, and like many other stocks on the market after Nvidia's earnings, there is a gap to fill. Buyers are going to be easily selling their position if it breaks 171.75, and they will fill this gap down towards 168.60. Next stock on our watch list is going to be AMD. AMD back above its 10 and 20-day moving averages after Nvidia's earnings, but it looks like it couldn't hold too strongly on Friday. So coming into this week, we need to see where AMD performs in terms of that 10 and 20-day moving averages. Again, your main focus at the beginning and at the end of every day is where did that daily candle close in relation to the 10 and 20-day moving averages. Above them, it closed bullish. Below them, it closed more bearish. Here are some levels to focus on for AMD. First things first, you have a resistance at 184.92, which is also its all-time highs. Above that level, bulls can take control again and move it towards the 190 plus level. To the downside, it has that support at 172, which is also right around that 10 and 20-day moving averages. If it breaks below that level, then there can easily be a gap fill down to 164.50. The next support we have available is going to be 161.70. Notice that we don't have any red area for AMD, so we would not consider shorting or playing puts on this stock, at least not for a swing. We would consider day trading it, but we would not consider swinging puts against it, given the fact that semiconductors are just so strong right now. The next stock on our watch list is going to be Nvidia, of course, which reached another all-time highs last week. Nvidia has been a phenomenal trade to us. We actually entered Nvidia back in November of 2023, right around 470, and it moved above our first price target last week, and it closed near our second price target. So far, Nvidia has been treating us very well. We do expect Nvidia to continue moving higher, but we do have some levels to base that off of. Here are some levels to focus on for Nvidia if you are looking at it on the shorter term time frames. The first things first, the main resistance and focus is going to be its all-time high right around 824. Nvidia buyers are going to need a breakout above that level for continuation towards 900. To the downside, we have a support at 742. Below that, Nvidia has a very large gap to fill down towards 676. We don't expect that to happen this week, and if it does happen, then that could be seen as a major opportunity to buy into the stock if you are looking to buy into the stock. The next stock on our watch list is going to be Meta, last but not least, which also reached another 52-week high or another all-time high last week before pulling back on Friday. Here are some levels to focus on for Meta. First things first, we have a resistance at 494.36, so that's going to be your main breakout point. If Meta breaks above that level, then it will likely move towards that 500 plus mark. We would consider taking calls on that position. To the downside, it has a support at 476. There is a gap down to fill towards 468. We would still be bullish on Meta. We are bullish on Meta unless it moves below 452. That's when we would turn a little bearish and consider a put or a short position. Of course, if you want to take these positions with us, make sure you join our group, and our link is in the description. So thank you guys so much for checking in. I hope you found this video helpful. We'll see you guys next week.